Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Friday, June 6th. Got a lot to talk about here, a lot of volatility yesterday because, a certain somebody was going a little crazy on X. But maybe that was a ploy. We'll have to think about that a little bit later. Gonna go over the usual tickers, but I did want to list off the ones that are on the list. And so we'll be going over GameStop. Did have a pretty big pullback. Think there are some signs it could be a dip buying opportunity. SoFi was requested, so I'll be doing that next. Then Rivian, I saw from an older comment on the channel, so I thought I'd revisit that. And then I will be going over Tesla as well as one of the leveraged ETFs that I think might be a nice opportunity. Then also ASTS, that was one that was from an older comment, so I will address that. And then also just wanted to follow up on ChargePoint. Been doing some reading on Wyckoff, and that has just been kind of maybe playing out in the ChargePoint chart. So I did want to go over that, and I should also note that the chat is open, so you guys can post your requests there. I will be checking that once I get through this list here. But yeah, I got a lot on the list, so I'm going to try to go through them a little quickly. And some very interesting levels were hit or nearly hit in the usual tickers, so wanted to go over those. Beginning with the UVIX, which is the 2x long VIX futures ETF, which did close yesterday on the 5th at a price of $28.19, being up 3.64% on the day, but pulling back a little bit in the pre-market. So this is one of the things that's a little bit risky about the UVIX, is that when you do have a nice green day, when you see a little bit of panic in the market, it doesn't necessarily always go up that high. So, went up about $1 yesterday, which is pretty nice. But for me personally, my average is a little bit higher than this white line here at 32.26. I believe I'm at 32.78, but I might be wrong. Should have trimmed at least up here, taken a little bit of profit so I could buy back more aggressively here, coming down below this alert that I have at $27. So maybe that is going to be acting as some notable support, a great dip buying level, but maybe we do head down to this purple line here at $25. Did hit a low yesterday of $25.73, nearly getting to that level, but not hit. I did have a buy order placed there just to add a little bit to my position, but I think that I have removed that. Just because, so much going on yesterday and it's not hitting 25. I wanted to move that little bit of capital over to be on the side. If this does come down to 25, if it does come down even lower, maybe to 1721 marked here by this 100% Fibonacci extension, as you can see there, I think that this is just going to be a nice one to kind of accumulate while it is in this downtrending parallel channel, as every time that price has been in that range, well, it might have taken about 200 days, 214 days, I think, to be precise, from the high here over to the high over here, accumulating in that range was a nice, dip buying opportunity to hedge when there's a lot of panic in the market. And we actually didn't see that much panic yesterday. Surprisingly, I expected it to be a little bit more so to the downside with the stock market, more to the upside with the UVIX, but it seems like, it may be retracing a little bit now. If we do look over at the 10-minute time frame, we can see, this pretty sharp decline to around 25.73 right here. But then I think somebody started tweeting, and we started to see this rally massively. So going from the low 25.73 up to the high from yesterday, 28.66, that represented a nearly 3% move in the span of 4 hours and 20 minutes. Coincidence? I don't know. From yesterday's pre-market, we did see a little bit of an up and down before that pretty massive pullback and then rebound. Now we have just seen it kind of floating back down, or sinking back down, I guess, into or through the after hours overnight and into the pre-market. But yeah, let's just real quick look over at the VIX just to get a perspective on the market volatility index, which for this can only really be trading options. So you got to have that time component, expiration contracts going worthless. So I don't like to trade this. That's why I like the UVIX. But the VIX did close yesterday at a price of 1848, being up nearly 5% on the day. So 4.94% versus the UVIX, which was up 3.64%. And I should also note the volume here does look like it's been increasing a little bit. So this does, in all honesty, strike me as being a little bit weak, that we could be seeing a more notable pullback in the volatility. If we do get a move to the upside, I do think that around $21.90, $22 or around 24 could be acting as some resistance. If we do get, kind of a runaway volatility spike, maybe getting up to around $28, that red line there, which, corresponds with the highs from December 2019. And actually that is the pivot high exactly, but I could lower that a little bit, just be like kind of the consolidation highs, just shy or right around, let's just say right around $28. We do have the open or the close and open over here being right around, let's see, 27.86 and then 27.94. So yeah, right around 28. So those are some levels to the upside. If this does break to the downside, though, we could be seeing it right around $15. I have talked about that level in the past, so I won't stress about it anymore. And then I will move on to the stock market. So the S&P 500 here, looking at the SPY, which is the S&P 500 tracking ETF, which closed at a price of $593.05, down 0.48% on the day, but in the pre-market bouncing about $2.30. Very interesting. I've talked about this level multiple times and kind of, the psychology around the stock market. It's always trying to fake us out. We're always, going long. We should be going short and vice versa. And so I suggested, I believe referring to the SPX, we'll go over that chart in a minute, but I believe I was suggesting that price could be heading up to around $600, and then maybe we see a pullback, maybe down to, levels over here around $570. Talked about that, definitely talked about that before. And then from there, then we take off to new all-time highs. And so, very interesting, the high that we got yesterday for the SPY was $599.00. So just $1 off of $600. It's, you're always getting faked out. And so I would have thought that, hey, maybe it hit $600 yesterday and then started to pull back. But it does look like in the pre-market, we are getting a little bit of a bounce. So maybe we're not yet at 600. We will go up a little bit higher and then see a more massive correction. So good to be prepared for that. This doodle that I have for some reason just left up here has just been delayed or premature by a couple days, but has really matched, this downside here followed by a bounce. This, I guess, was a little delayed, or the market was a little premature versus my doodle dipped down and then going up. So pretty cool to see that there. But then if we do look over at the pre-market, let's just look at this. In the market hours yesterday, a little bit of a pullback, bounce, and then, Elon starts tweeting, and we start to see this pull back. So I'm coming down to a low of $591.06, bounced into the after hours, but then pulled back some before floating higher through the rest of the after hours, overnight trading, and then kind of, flattening out maybe, 596. Potentially seeming like some resistance here. We do have the high in the overnight trading of 595.82, and we're not really able to get above that in the pre-market. So very interesting there. Then looking back over at the daily, do have some gaps to the downside as I've talked about. So if we do pull back to 570, could see it go even lower. So be cautious of that. But I do think that we will be heading above $600. And we do see, let's see, is that volume elevated? Relative to over here, this volume has not been that impressive. So, it could be suggesting that there will be a continuation to the upside, but, maybe we need to cool off. We did have the RSI over here on May 19th at 69.58. We have pulled back a little bit, but we have put in a higher high in the ETF price, lower high in the RSI. So maybe that is some bearish divergence, although that does not seem to be too notable since the RSI hasn't pulled back that much. This hasn't really gone that much higher. But yeah, let's look over at the SPX now, which is the S&P 500 index. This did close at a price of $5,939.30, being down just a little over 0.5% on the day. And this I find very interesting, more interesting than the SPY. The high yesterday was $5,999.70, so just 30 cents off of $6,000. Do have an alert there, it looks like. Let's just look at that $6,000 alert, and that did not go off because that high was 30 cents shy of it. So I find that to be really interesting. And yeah, I believe I drew this doodle yesterday. I was thinking that price could be going up to just over 6,000, pulling back then to around $5,700, corresponding with the same levels that I have doodled or drawn on the S&P, or sorry, the SPY, and then thinking that, it would bounce from there, go to new all-time highs. But yeah, those levels, let's see, one of those is the green line here, which is a 236 from this Fibonacci retracement. I should actually probably move that up a little higher because the index and the ETF did go to a higher high yesterday, as I was just mentioning with the SPY. But, maybe we do take those highs out. So maybe don't want to be getting ahead of myself redrawing that retracement just yet. And really, it just suggests that price could be coming down to around $5,700 here with the SPX, or just remove that zero, $570 on the SPY. Also with that level corresponding with this neckline of the head and shoulders pattern here that played out to this retracement, but then broke down even more, corresponding with Liberation Day. So yeah, I could see this pulling back some, but I could also see us taking out $6,000 today, as we are seeing a little bit of a bounce in the SPY pre-market as well as some other stocks pre-market. So we'll have to look over at those in just a minute. But I did want to talk about Bitcoin and Ethereum. Crypto in general did see a pretty massive pullback yesterday, and Bitcoin is now trading sub $104,000. Did hit a low yesterday of just above $100,000. I've talked about it in Crypto Corner, and I will talk about it again tomorrow for Crypto Corner Sat Stacker. That $100,000 kind of a psychological level, people wanting to get dip buys there to buy just below 100,000, and they are going to be getting left behind. So good to be considering that. And then I will just pull up the chart over here on TradingView, just because I think the data is a little bit better, and this is what I will be going over tomorrow during Crypto Corner Sat Stacker. And so I did have some limit dip buys, some orders filled yesterday. I'll talk about them tomorrow in Crypto Corner Sat Stacker. Some of them were filled, some of them were not. I'll leave it to you to decide if my Bitcoin limit buy was filled yesterday, and if I have any more in case this does go lower. But yeah, I mean, I could see this potentially having a little bit more downside to just sweep out any last minute over leveraged longs, and then this takes off to the upside. I should note here, this is data from that's why I was like, well, why isn't there that much stuff drawn on this? Because I want to be looking at this on the Coinbase chart. So yeah, this looks very good, much better. And so, yeah, I mean, basically, the thesis that I had or have had has been, kind of a sweep of the lows and then a takeoff. And so, yeah, maybe you can get an idea of where some of those limit dip buys might have been or are. But yeah, I mean, at this point, I could see this going a little bit lower. I could also see this starting to take off to the upside. But it does kind of look like maybe there's a head and shoulders pattern there. Maybe people are looking at that, expecting it to go lower, and then those people, get left behind. So good to consider that. Good to be prepared for the upside, the downside, all of the above with crypto. And then let's now look over real quick over at Ethereum. This one, did see a pretty nice pullback, now trading below $2,500. Hit a low yesterday of $2,392.16. Maybe dip buy was filled, maybe it wasn't. Maybe I'm going to add another one tomorrow. You'll have to tune in for Crypto Corner Stat Stacker to find out. And it looks like the low for today was actually a little bit lower than yesterday. So the low for today was $2,384.00. Actually corresponding very nicely with this 382 here at $2,384.49. So pretty remarkable, just barely. If I do move that, we can zoom in and see that, we barely 49 cents pierced that level there. So yeah, I think that we could be seeing Ethereum taking off to, $3,000, $4,000 a coin, but we could also see some more downside. So good to be prepared for both upside and downside. But now, with that being said, having gone through the usual tickers, I will be going over some of my faves, some that were requested, and stuff like that. So GameStop is the next one on the list, ticker symbol GME, which closed at a price of $29.45, being down 1.67% on the day, but bouncing a little bit, about 30 cents in the pre-market. And so, I doodled this out maybe a little bit premature before getting this high of 35.81 that was hit on May 28th, kind of suggesting that I could see a pullback to around $28, $29 and then bouncing. And so I have to say, I have been accumulating a good amount of GameStop, at least a good amount for me. Probably not that notable, but I now have 100 shares, so I can sell covered call. So I will be considering that for selling covered call and then rolling it. But at the same time, GameStop could be squeezing massively, and so I wanted to talk about that. Looking at the chart here without any doodles, thing that concerns me a little bit is that we have a downside move here in consolidation, so that looks like a bear flag, especially with higher volume on this big downside move. Lower volume for that consolidation does make me think that this could be a bear flag. That lower volume suggests continuation, and so we could get an idea of where that could be going by doing a Fibonacci extension to the downside, maybe coming back down to the 25s. But I don't necessarily think it's going to happen, and the reason why is a video that I will go over. I would encourage you to follow this person both on X and on YouTube, but that really comes from looking at this on the weekly time frame. Of course, the week is not over yet, so take this last candle with a grain of salt. But over here, while this could still be looking like a bear flag, it's also quite possible that we could see a V-shaped recovery, or that we see, would this be a morning star or, abandoned baby? I think it'd be a morning star. Not exactly sure, but basically suggesting that next week we could see a reversal going back up to the upside, maybe getting back to $33, $34. So I find that to be pretty compelling, whether this is a V-shaped recovery, with today going back up, or maybe next week with this being, I believe that's a morning star. And actually, I got the internet here, so why don't I just pull it up? Morning star pattern. Let's just see. Yep, so we got this over here. This would be an morning star up there with it's at the bottom, and then evening star there. So that is at the top, pulling back. This is, at the bottom, going up. So, yeah, I think that this could very well be a morning star on the weekly. But if we do look over at the daily, it does look like a bull flag. Earnings coming up. And actually, I'm wondering, I was just talking about Bitcoin, if GameStop was buying the dip there. So that could be, really nice news that we get with earnings. So, but I think that this could be going up, and that's kind of the thesis that I have been going with. And I did accumulate up to 100 shares, so I can then sell covered call just to earn a little bit on the shares that I hold. And my average is below the current price. So, I think that, I'm kind of safe there. If it does squeeze and I get pushed out of my position, at least I would be making money on that. So that's not that big of a deal. But the thing that I did want to pull up, I am actually, let's see, just going to go over here to the channel, going to go to a post that I made yesterday. This is from Free Wyckoffs. You could check them out. I believe his name is Rico. Super nice guy, very informative. And I will be going over some more Wyckoff analysis later in this video with a specific stock. And yeah, so GameStop, I'd encourage you to check out this video. It is about 10 minutes long. You know, I said in this post, looking at the chart, it could be a bear flag, but on the weekly, it could become a V-shaped recovery / retest. We'll have to cover GameStop tomorrow. And so that is today. I did just go over that there. And yeah, I will also pull up one of his posts on X. Because I think that, yeah, he's got a lot of good stuff going on with the charts. And so I wanted to share that with you guys. I find Wyckoff analysis to be really helpful. I am learning about it, and I will be going over some of that later. Yesterday it was requested that I do go over SoFi, and what I had talked about in a previous video the last time I went over it was this green uptrend that seemed like it was acting as support. We have been consolidating along that. So that makes me actually feel a little bit nervous that this could be breaking down. Especially with yesterday's trading, we did see this inverted hammer, big wick to the upside. You know, not enough volume to push it and hold it up there. That makes me think that there is a rejection, that this could be a bear flag, and that this could be going to the downside. But if it does go to the upside, I do have this red uptrend corresponding with the tops over here. So maybe there is a move up there, but really, you know, I think that that move was attempted yesterday, hitting a high of $14.32, and then pulling back to close at $13.67. So I think that was a rejection. I don't think that this doodle that I have up here will unfortunately be playing out. And instead, I could see this kind of risk to reward play out where we see this come down to around 1231, maybe find some support there. And then maybe I would want to adjust that risk to reward level based on that. So we do have this gap that was filled, that was based on the closing price of April 2nd, 1231. And then I do have, let's see, another gap down here. That would be at a price of, let's see, what was that close? That's what I'm looking at. That was the closing price from April 22nd was 1127. And so, yeah, I am going to adjust this a little bit because I think that with that price, that close at 1127, let's see over here. Let's see, 1127, got that marked. I just remembered something that I wanted to go over with Bitcoin, so I'm actually going to take a little bit of a detour to talk about Bitcoin for a second. I forgot I wanted to put up the moving average here because we hit the 50-day moving average, I believe. Yep, 50-day up here moving average. Yesterday, wick down to it, so that does make me think that there could be some support there. So, yeah, I did just want to point that out. So, potentially looking very good, very supportive over there. But anyway, sorry about the detour. Coming back to SoFi. Maybe actually I want to pull up the moving averages. We do have, it looks like a confluence of, the 50 and 200 day moving averages right around 1241, 1248, 1231, that level I just talked about. So right around there. So I think that price could be heading down there. And so this risk to reward, the ratio is around 130. I don't think that's a good trade. What I would like to do with this, I'm just going to adjust that to, let's see, maybe put that dip buy level at around 1231. So entry price, 1231. And then that gap is, like I said, around 1127, but maybe we sweep that gap fill, get down to there. And then so I would say the risk level would be to around 11, just going a little bit lower than that gap fill. And then the upside target, 1469. I think that's fun, but maybe I want to be a little bit conservative and just do it at 14. So let's see. Risk to reward ratio, that's 29. And actually, no, I think that I will leave it. That's close to 2, so I don't think that's too bad. And yeah, I mean, let's see. Maybe let's just do it whole dollar numbers here. 1231. Profit was 14. This should be 1469. So 1469 there. There we go. So, hey, and the risk to reward ratio is 2.69. So I think that's, exciting. I think that's fun. I don't have an order placed on this, but if this does come down to 12, let's see, add an alert. If this does come down, man, I got too many things on here. So I'm just going to go on a deletion spree and, let's see. 5. Yeah, these bring up some rough memories. I wish I was more aggressive in the past, but anyways, good to be in and out of trades. Always a volatile market. So below 1231, so that blue line, that gap level, and then that would put this on my radar. I would see, check the chart, see, risk to reward ratio, buying at 12. If, I get 20 shares is what that quantity is saying, I could then, stop loss. Let's see. Well, no, account size 40. So I'd buy 40 shares there. That would be, let's just do some math here. That would be suggesting 40 shares times $12. That would be a risk of around $480. And then if I sold half of that position, let's see, 50% at 20. Limit sell at 11. So let's see, let's just divide this by 2. And then 240 minus, so let's see, $11 times 20. So that's going to be 22 there. So I then risk $20, sell there, and then reevaluate half of that position. But maybe I just want to do all of it. I don't know, because I think that you then get kind of lured into, a back and forth. I don't really know, but it's something to think about. Generally, I think this is going down to around $12. So, and then I think that we could see a fake out break. I'm just going to delete this and make this line locked into place, make it dash though, because it's a gap that has not yet been filled. And so I find that to be a pretty intriguing trade setup, that if we do fill that gap, although, we have left a number of gaps behind in the past, so maybe that doesn't happen. So I think that's kind of a nice risk to reward ratio. I do think, though, that this, like I said, could be coming down to around $12. So keep that in mind. Did go on pretty extensively with SoFi. Will not be going on too extensively with Rivian, because I'm not sure this was actually requested, because I think it was an older comment. But Rivian did close yesterday at 1378, down 1.64%. And from the highs over here, it's been down about almost 20% to the lows yesterday, over 20%. These doodles that I've drawn here did not play out, but you could think about this as kind of being something like that. I can't stretch that. But yeah, so let's just delete some of these levels. Or actually, maybe just extend this up to the high from over here. Got a 50% retracement there. So look at that. So just going to make sure the low here, 1036, is correct. 1036. And then the high was 1715. 1715. So I'm going to lock that into place. So yeah, 1375. I do think that we could be seeing a bounce here corresponding with the high over here, but I also think it could come down to around $13. And then from there, maybe it would be putting in, a head and shoulders pattern. So good to be cautious of that. That could then be bringing price down to maybe around $11, corresponding with this Fibonacci retracement over there, which served as, approximate bottom over there. But I don't necessarily think that's too significant of a level. I do think that this uptrend, that yellow line going back to the lows over here from April of 2024, lows around $8.26, and then retest over here from November of 2024, the lows around $9.50. Did get tested over here. Maybe we get down to around 1103. So that's kind of my thought process with this. I think that there's a little bit more downside. So maybe I'll put an alert, let's see, at $13, because I think that's where we could be headed. And then if that alert goes off, maybe I'll do a follow-up on Rivian. But yeah, talking about the EV space, let's talk about the crazy, the volatile Tesla. I don't know what was going on with Elon. I kind of feel like maybe it's a ploy that Trump and he are coordinated on that to release the Epstein files. Maybe not, though. I don't know. Maybe it's just that he really cares a lot about the country and getting the debt under control. I think it's very important. But I don't know. He's talked about Tesla and SpaceX being his babies. So I don't think that he would throw them under the bus because of this feeling that he has. But at the same time, what is more important than his babies? The country. Those babies rely on the country. If we get into a death spiral, Tesla, SpaceX, none of it's going to matter. So I could see that also if Trump is on that list. Why would Elon let Lil X go with Trump on the helicopter, stuff like that? So I don't know. I feel like maybe an angle of it is a ploy, an angle of it is maybe just somebody has too much on his plate and he lost it a little bit yesterday. I have no idea. But Tesla did see a very nice pullback yesterday. If you were buying the dip, I think that, a week from now, I'll be saying congrats. If we see Tim Walz come out with a post saying that he got a nice boost yesterday, I think that would be another bottoming signal like we saw over here. But yeah, Tesla did close below $300 a share yesterday, coming down to close at $284.70, down 14.26% on the day. I believe this is one of the biggest down days in the stock's history. So pretty insane there. I was looking at this yesterday and I put this up here. This is the 618 to around $273, right around there. Does correspond with, the tops over here. This consolidation below it could be acting as support, but we could also be heading lower to the 786, maybe around 250. Don't know exactly where that level's at. I'm not going to complicate the chart putting it up here. But so for me, I am a Tesla shareholder. I believe in it long term. I also believe in Elon long term, but I also think that, aspects of him are, a little bit crazy. But, I think he's human. We all are. He's got a lot on his plate. So I think that the craziness can, be a little much with him sometimes. But, he also accomplishes some crazy things. So, he gets a little bit of a pass, but I don't know if he gets enough of a pass for what he was doing yesterday. So we'll see. But yeah, I have been dollar cost averaging to my very small position, buying fractions of shares on the way down. I did buy more aggressively once it came down to 300. And to be honest, I was waiting. I believe I have an alert here at 300. I should have just waited for that. And that's always the case with Tesla, that, I'm not waiting for the dip buy level, because I had done that in the past. I began to establish my position at the lows over here on August 5th. The low is 182. I had bought one share there at 185. I'm still holding that share. Now I have more shares than that. I have a total of 3, so it's a pretty small position. But I try to keep the emotions out of it. And when this did come down to 300, I bought a little bit more aggressively, and then I bought the rest of the remainder to bring myself up to 3 whole shares at around 276, I believe. And I'm happy I bought the dip. I wish I would have been a little bit more patient, but my average is now, while it's above 185, I believe my average is right around the 786, which is around 250. I believe I'm just above 250. And so if it does come down to that, then, maybe it's a time to just buy another whole share rather than fractional. But yeah, I think that we will be seeing a bounce from this. I think that this is going to be a great dip buying opportunity. We do have, though, this gap to the downside at around 213.65. But yeah, just like what we saw over here. Let's see. This is April. No, the one that I want to get to is that over here? Yeah, August 5th, we saw this dip buying opportunity when there was a gap down, a lot of panic in the market. And so maybe we're seeing that now with this. While it's a red candle, a lot of volume behind it. Long term, I think this is going to be a dip buying opportunity. So all depends on your perspective. But if you want to play it the short term, One thing that I kind of regret doing or not doing is up here when the stock price came up to above 360. I think I had maybe mentioned shorting Tesla then, but I was expecting the price to get above 360 over here. That didn't happen when it came up over here. I was thinking, well, maybe it's a bull flag. We're breaking above the highs here. So I didn't open up a short. I should have. I could have made a little bit of money, but in all honesty, it wouldn't have been that much. It wouldn't have been that notable. But since I was buying the dip with Tesla, and it does look like it's bouncing up over 10% in the pre-market, maybe what I want to do is start to accumulate a leveraged long position. And so a way to do that is with the TSLL. This is the Tesla Bull 2X leveraged ETF. Currently trading just a little bit above 10, but it did close below 10 yesterday, having hit a low of $8.86. Testing this level that I have drawn over here, probably not that significant. And also this is the leveraged ETF based on a stock. So I don't think it's really good to be doing technical analysis on this. But if I am going to do that, 629 was the low over here. The high over here was maybe that 1688. Is that... why is the cursor not showing up? 1688. Yep. So we do have the 618 retest there around 1034. Maybe this could be going lower. So what I might do just to, trade it. So I would not hold these for the long term, or, maybe I would for a month or so. But I might start to accumulate a small TSLL position, really just by one share at a time. Because, if this is at $10 right now, maybe over the course of the week, we get back to, maybe over the course of the month, we get back to the highs here. And then from this level, that would represent, a 50+% swing trade. So I could turn, $10 into 15, really not a lot of money, but it's just getting, more used to the kind of pivoting trades. Do I think Tesla is at a bottom dip by panic level? Hey, but maybe not. Maybe I want to start to accumulate something that I would then eventually want to sell, whereas TSLA, Tesla stock, I would want to hold that, forever. So this, I think, could be a nice swing trade, but to the upside versus over here when it would have been good to accumulate to the downside. Also, Colin Gladman has been posting a lot about Tesla and this other stock that he has taken some short positions on. He's made a lot of money yesterday. And so with all of that, posting about that, the hype, I imagine he'll be taking some profits on that, exiting those short positions, and then Tesla could be starting to go up. So I think it's good to be thinking about that. And then related to Tesla a little bit, of course, we have, SpaceX, a space company is going to be ASTS. So this is ticker symbol ASTS, which is AST Space Mobile, or as I like to say it, Space Mobile. We closed here, ASTS, not a shareholder, but did close at $30.85, up 7.5% on the day. But this is also a pretty massive rampage. I do have a doodle here suggesting that I thought there'd be a bounce before pulling back. And so, I can't stretch this, but we have, gotten that move up. Now I think that we could potentially be seeing a pullback. So good to be cautious with that. Do have some levels, some consolidation over here. The highs over here around 29.39. Now pulling back a little bit in the pre-market, down almost 2%, 1.7%. So I think that, after this bounce from the lows there up about 40%, I think that we could be seeing a retracement, maybe coming down to around $25 a share, finding that as support, this consolidation here. So good to keep that in mind. But then now, I wanted to go over ChargePoint really quick. Just going over the chart here, also in TradingView, and go over some Wyckoff stuff. But so with ChargePoint, I had kind of suggested that following the earnings, that yesterday's trading, maybe we'd find this green uptrend as support, but then maybe form a bear flag before, we get an announcement of a reverse split, and then this breaks down to fill this gap around 62 cents. As you can see, we did not get that. We broke below, actually gapped below, that uptrend. So I don't think this is looking so good. I'm actually now looking pretty smart for having sold the majority of my position at 70 cents. I'm not sure what my average sell price was, but the bulk of it was at 70 cents because and maybe it was 69 cents. I don't know because I'm an idiot. But yeah, I mean, it is below that now. However, I do say that in the pre-market, it looks like it's trading around 68.99 cents. But yeah, I mean, this level that was potentially support consolidating along it here. Now it looks like it's going to be resistance. So maybe we move this down to something like that. And so, yeah, I mean, I don't think this is looking that good. So good to be cautious with that. But I have found going over the chart to be a little bit more helpful over here in TradingView. And I did want to go over some levels that, stand out to me, or some analysis that stands out to me. I did adjust some of this based on some Wyckoff analysis that I was reading yesterday, which, if you're wondering, I think it's going to be backwards for you. But this is the Wyckoff analysis, the Wyckoff methodology in depth. This is by Ruben Villahermosa Chavez. I'm not sure if I'm pronouncing his name correctly, but I'm only on like page 90 of it. I do have a lot more to go with it. But something that stood out to me, which I'll read from, and also did want to point out something from Free Wyckoffs. But I had labeled this as spring ? Over here. But then from reading the book yesterday, I was recognizing that, it looked to me like this was potentially accumulation, because we're seeing this low volume over here. I did label this as the preliminary support, and then we get a bounce, then come back over here, effectively like a double bottom to form the selling climax, then get a move up to the automatic rally rejection there. And that really defines the range that we're in, which, is approximate, so take it with a grain of salt. And then we see a pullback to the secondary test. I thought that this could be a spring, but it seemed a little too shortened. Like I'd want to see more consolidation before we see that spring. And so from reading yesterday, I recognized that, well, actually, maybe this is not accumulation, and that would match my thesis on the reverse split and ultimately this going lower. So maybe this just looks like accumulation, but it is actually just a redistribution, which, this I guess would have been distribution before going down more. And then so now what we're seeing, I just want to, let's see, zoom in, but then adjust the axis so we don't have the volume overlapping with those candles. That's something maybe I need to adjust in my TradingView defaults. But this actually ends up looking like, rather than a spring, it is a minor sign of weakness. And that would then be kind of suggesting or switching to this becoming distribution or redistribution rather than accumulation. Then get a bounce, a retest of that level here. Test of the midpoint, which is the blue dash line. Lots of, the price right around there. So lots of lines there. Pullback, retest, again, approximate that lower portion of the range, move up to consolidate rather than that uptrend that I was talking about, consolidating around or above the midpoint before breaking out, which would then be marked as an upthrust, denoted as UT, and then kind of the rug pull makes me think, okay, well, wow, this might actually be distribution that does then match my thesis on the reverse split, and then this going lower, but we are above this orange downtrend, so maybe there's some hope there with that. Before reading a little bit from Free Wyckoffs, I just wanted to pull up, let's see, do I have him on here? Yeah, Free Wyckoffs. He did have a post that I was very interested. I believe it was, no, I think it was FVRR. This one, yeah, so I was just looking at this analysis. And so, I mean, you can see that the accumulation here takes a long time. And so I haven't gotten this far in the analysis. But what we see here, so maybe we are still in accumulation with charge point. But like I was just talking about, we have, the preliminary support over here before coming down into that selling climax, which I have denoted over here. kind of like a double bottom there because we didn't really get that automatic rally until the test over here, then going up. And so we do see that automatic rally here, then a pullback. And so this was actually, lower, this secondary test. So maybe that matches with the chart here. And maybe this is actually not a horizontal parallel that we want to be looking at. And maybe we actually want to be looking at a parallel that, let's see, not fibs. I want to go over here. A parallel. There's going to be a little bit of clutter, but maybe if I do the pivot low here, and then the pivot low from over here, and then up to that high. I don't know. We got, a little bit of a breakout, but we are now trading below that. I don't know. I personally don't like how I have this shading on this. It just looks a little too cluttered. So I think I'll have to adjust that later. I do like the kind of white lines there. It looks nice. But yeah, from that, if this is to be, the secondary test over here rather than a minor sign of weakness, and we do see this up thrust here, which from the book, you could denote that as a UA, which is, I'll have to look in the book, then pullback. Lots of downtrending consolidation here before this minor sign of strength. I don't know what LPS stands for. I have to learn more. I have to read more. And then this is suggesting a breakout retest. So basically what that's saying, looking at this chart, is we have a time frame. This is on the 1 week candles. But what we can see is this is multiple months. So charge point looking over here, this is multiple weeks. And then looking at this, that was really just like the first third of this trading, maybe first quarter. So, if charge point goes back to, getting into this range February, so let's see, is that about 3 months ago? We could be looking maybe by the end of 2026, charge point, maybe it starts to break out of this. So I do think that charge point could be, potentially an accumulation, but it's going to be longer term. And so that would make me think that charge point could be, getting back into the 50s, maybe testing 50 cents. And so good to be keeping that in mind, good to be considerate of that. But I do think that could end up being something like this, where there's then a breakout and then this maybe goes higher. So, maybe this is, a potential trade FVRR, but this is not my analysis. This is from Free Wyckoffs. Rico is super friendly, super great patient educator. I am considering paying to join his Discord, which I believe is about $35 a month. Generally, I try to produce content. It's free. He produces some content that's free. I like to take advantage of the free stuff, but at the same time, doing these videos, I recognize it's a lot of work, and he has a lot more education behind him than I do. So I do feel like, it's a worthy cost to support by paying for that Discord. And I think that, maybe after I read the book, maybe I would kind of experiment with a month. But with my work schedule, working on projects at home, kind of a tough time of year to be doing that. But I do think that there would be a lot of value in that. So maybe I would consider doing that maybe in the winter or the fall when the projects at home start to cool down. But anyways, just looking at the chart here, I'm just going to read a little bit of this because, something jumped out on the page to me that I thought was pretty interesting. So let's see. I just I should have marked, let's see, I'm just going to, okay, so I think that this is a secondary test at the lower extreme. That's not what I was thinking. Let's see, characteristic of the secondary test. So no, what I wanted to read about was, I believe, the failed test. So I'm just going to read a little bit of this, the generic test. This is on page 88 if you're curious. And let's see. Actually, I should have noted this. But anyways, yeah, I'll just read the generic test. Maybe this is not what I was looking to read about. But so just reading here, a test, by definition, is an attempt assessment or examination of something. In this case, what is being tested is the intention of large traders to continue in that direction. And so something like a charge point, there aren't large traders, it's just too small. It's retail driven. So the test can be considered successful if a candlestick appears that suggests a lack of participation of smart money. And without this participation, the market will not be able to go very far. And so if professional traders have interests higher up, they will want to make sure that the supply has been eliminated or absorbed before starting to move upwards. On the other hand, if they anticipate lower prices, they will do their best to confirm that there are no buyers willing to complicate the move downwards. I'm reading fast because I want to get to a point that stood out to me, and maybe I won't get to it, so I apologize if that's the case. As the market enters a zone where there was previously a high volume, there can be one of two results. A valid test, the volume is now low, which clearly indicates a lack of interest and suggests the market is now primed for a shift in the trend towards the path of least resistance. We did see increasing volume with charge points, so I don't think that's the case. Failed test, the volume is still high. Relatively, we can see that, relative to what we've seen over here and over here, volume was high, although over here, not so much. The volume is still high, relatively, which would indicate that there are still traders willing to keep pushing the price. The best thing to do in this case is wait for repeated tests to appear that confirm that there is no stock available or that the market is continuing in the direction of its latest movement. As a result of the above, these tests can be a good moment to enter the market. If the test is valid, we can bet in favor of the force that is applying the most pressure and that, in theory, has greater control of the markets. That is not what I wanted to go over. I apologize about that. But what this suggests to me is that there was a clear rejection here, if I have this drawn correctly, and that I do think that we would be pulling back to, if not 50 cents, the 50 cents range. And there was something about, I think I need to, maybe I'm going to back to page 84. I think it was at the bottom of the left page, but maybe I'm wrong. So let's see. This characteristic, which is a secondary test, together with the rest of the elements that we have been discussed as well as those that will follow, are signs that we will need to take into account whether we are dealing with an accumulation or a distributive structure. So that's kind of what I'm dealing with, thinking about charge point. It is about tallying up the points in favor of one side or the other, and the more of these signs that we observe in favor of one direction, the stronger our analysis will be. The more signs we observe that denote strength, the more control we can assume the buyers have, and vice versa. That is not what I wanted to get to. And so, yeah, I'm sorry about that. I don't know exactly what I wanted to get to with this, but I'm just going to flip back to and let's see. Sorry, this is probably not the best stream. Yeah, so I mean, this is just stuff that, I'm learning. I find it really interesting. I don't read a ton each day. But yeah, I'm not going to dive into that. Basically, what I had read, which I should have, bookmarked, was that when you're getting up to here, people maybe sell a little bit prematurely. That was me. I could have sold at 87 cents or so. But I didn't. I sold the majority of my shares around 70 cents, so around where we're currently at. So, yeah, I mean, I'm not perfect, but I just think that at this point, I think that this is going to test the lower range, so getting back into the 50s. So that's kind of my thoughts on that. But then I will open up the chat. Probably won't spend too much time on it. Sorry about all the stuff. There's actually nobody in the chat, so maybe that's good. And yeah, I'm going to close this down, and let's see. I will... Ooh, and actually, okay, let's see. Yeah, I had a little. Anyways, I'm just not really doing anything. With that being said, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Hopefully, you guys have a great Friday, great day trading, great start to the weekend, great weekend. I will see you for tomorrow's Crypto Corner Sat Stacker. Not doing that live, but I will have that out sometime tomorrow. Hope you have a great day, and yeah, I'll see you in the next one. Take care.